Today's webinar, the Mindset Meets Mechanics session, is all about why you might consider trading the US market and how you can go about doing it. My name's Shane, and I would have spoken with most of you over the journey at one time or another. Now, before we get started, I just should point your attention to our financial services license to say that what I cover today is more of a general nature rather than me giving you specific advice as to which shares to buy, hold, or sell, and that past performance is not an indication of future performance. Now, I'll start this session by saying that I'm not as technical as Gary, and I don't have as many analogies up my sleeve as Dave does. So I'm going to try and keep things as simple as possible as we go through things today. I'm going to assume that there are some new members watching this, so my apologies in advance if some of the things I show are a bit basic in terms of process for some of you advanced members who have been doing this for years. So on that note, let's start with why you might want to trade the US market in conjunction with your ASX portfolio. Now, in Gary's Real World Portfolios webinar recently, he plainly pointed out that the ASX has struggled and the US market has done much better over the past couple of years in our public portfolios. Now, I'm sure that comes as no surprise to anyone. If we look at this comparison chart of the All Ords versus the S&P 500 over the past 10 years, you can clearly see the big difference that it's made. The US has massively outperformed the All Ords. And if we look at the past 5 years, including the COVID crash, you can see just how much the US recovered compared to the Aussie market since COVID there as well. And he's just powering on. Sure, bit of volatility last week in both markets, but the US has clearly done much better. And putting things much simply, if you had some of your money exposed to the US market during that time, there's a good chance that you would have been more profitable. There's nothing more straightforward than that. In David's session 3 weeks ago, he talked about the core and satellite approaches to investing. If you had a small amount of exposure to the US with one of your satellite portfolios, not even if it was all of your portfolio, but even just one of your satellites, it would have made trading the past couple of years a little bit easier psychologically, seeing some decent profits in one of your portfolios and giving you diversification when the ASX just wasn't performing as well. It also gives you exposure to industries that aren't represented in the ASX that much. There's the big tech stocks in the US with massive liquidity. Industries like AI and pharma that just aren't as big in our materials and financials dominated ASX. And let's be honest, while we're all being very mechanical and sticking to our plan with the right mindset on the ASX, it's been hard not to notice all the news about AI stocks like NVIDIA with their massive rise over the last couple of years. There it is. Now, who hasn't wished in the past couple of years that they'd had some exposure to NVIDIA and gone along for that ride? SPA3 Investor was there for most of the rise, and as you can see, it got out for a lot of that recent pullback. And I think it had a good night last night or the night before as well. Even the largest US stocks can have these massive trends, up 1,000% in a year and a half there, and they move much faster when the market gets excited about them and really backs them in compared to most Aussie large stocks, that is. NVIDIA went up to over $1,200 a share before they had that 10-to-1 stock split back in June this year. So today's really about showing you some ways that you can get exposure to some of that in the future if you want to. Some of you, you'll already be doing it and enjoying the rewards that have come along with doing that. But for many, trading the US from Australia can sound a little bit scary, can't it? There's questions like, how do I deal with the time difference? What about the currency risk? Which broker should I use? And are there going to be big tax implications if I'm trading at a foreign market? In this session, we'll take a look at those and run you through the day-to-day process with both SPA3 Investor USA and SPA3 Trader for the NASDAQ. We'll also look at some of the options you already have at your fingertips within SPA3 Investor ASX, where you don't have to send money offshore or even deal in foreign currency. So as we do go through, feel free to write down your questions and I'd be happy to answer them after this session. As always, you can contact us on the usual number 0395850300 or 1300 stocks, or support@sharewealthsystems.com at any time. This also goes for the times when you need a hand with your current systems as well. Okay, so as you're probably aware, we've got two major systems for the ASX. SPA3 Investor, the less active approach that most of you follow, focused on a select group of stocks and ETFs. And then there's SPA3 Trader, the more active approach that covers the entire market of 2,700 or so stocks on the ASX. SPA3 Investor, it gets most of the airtime as it's easier to manage with less trades. It seems that one's the one that most of our members favour, so that's why much of the education is centred around that. On the US market, there's SPA3 Investor USA, which Gary covered in his recent Real World Portfolios webinar that I mentioned before. And we've also got SPA3 Trader for the NASDAQ, which is an active system that covers the 3,300 or so stocks on the NASDAQ market itself. We found that the volatility in the NASDAQ stocks was more suited to SPA3 Trader's active approach compared to the New York Stock Exchange, hence why it's focused specifically on the NASDAQ in comparison to the New York Stock Exchange. Okay, so let's have a quick chat about the easiest way to access the US market, and that's with the use of ETFs. You don't need a separate broking account. You don't need to change any money. You simply open up your normal broking account and you buy an US index-based ETF listed on the ASX. Now, as I'm sure most of you are aware who are using SPA3 Investor, you already have access to 4 ETFs with buy and sell signals within SPA3 Investor itself. Now, those 4 ETFs are IVV, which covers the S&P 500, IJH, the S&P 400 mid-cap index, IJR, S&P 600 small cap, and VTS, the Vanguard Total Shares Index ETF. Okay, you can just access them in Beyond Charts. So if you go into Beyond Charts and you look over to the left in your industry watch lists, you can see them in there as 4 of the Aussie ones as well. So it's really easy to do that and you can access them straight away. With these 4 ETFs, you're buying them in Aussie dollars and the currency conversion is already built into the price. So there's no need to send money offshore and you don't need to worry about watching any Forex charts. It's just like buying any other ASX listed stock, but the movement relates to the performance of the US index that it's actually tracking. Buy one of these and you've automatically got US exposure. It really can be that easy if you want to put things or keep things really simple. Yeah, on the screen here, we've got that chart of IVV in Aussie dollars, and you can see the buy and sell signals there. You could go in, buy one right after this session if you wanted to do that. Now, even with the big super funds like Australian Super and their member direct option or the host plus choice plus options that now allow you to buy and sell your own shares within your industry super fund, they'll allow you to buy some of those US index ETFs within their platforms as well, almost like a quasi self-managed super fund. Now, I'm not saying everyone should do that and everyone's circumstance is different, of course, but again, there's more and more ways that you can get exposure to the US market, even within your super. So that's the first way that you can use the system to help you get US exposure, and it's already there. It's ready to go for you. The next way that you can get US exposure is, and it's probably the most popular way, to be fair, with our ASX members who are already trading the US, is to do so within SPA3 Investor. Now, to do this, you don't need to buy another system or install any extra software. All you need is the US data and an online broker to do it. Now, this gets you access to 63 stocks and 32 ETFs on the US market, and that's across the New York Stock Exchange and the NASDAQ, and the ETFs are traded on the ARCA Exchange, a division of the New York Stock Exchange. Okay, so all the signals will get updated in your current app, as you can see on the right here, or within Beyond Charts, if you prefer to look at the actual charts and the watch lists within Beyond Charts, whichever way you prefer to do things. So if you want to see the current status of all the US stocks, whether they're open or closed positions on the app, you can do it. The US data, I should mention, it usually comes through about a half an hour up to about 2 hours after the US market closes. So it's there for you in the morning if you want to be looking at placing your trades, which we'll talk about how to place a trade in a moment. But as I said, all you need is access to the data to be able to access it. And we've got a special offer for the US data for attendees of this session that I'll go through at the end for anyone that's interested too. But as I mentioned before, this trading overseas thing in another currency is where things may have been a bit scary for some people previously, and where the nervous questions usually come in. The first question is usually about brokers. Okay, and how does the currency conversion work? Do you trade in US dollars or do you trade in Aussie dollars? Well, there are plenty of brokers that now offer US stock trading from here in Australia. Someone like Saxo Markets, who we've been dealing with for a very long time, or Self Wealth with their fixed brokerage fees are often favourites of our members. At the end of the day, you can use anyone that you like. Just like with the ASX, you can use whoever you want. Just try to avoid the ones that charge an arm and a leg like some of the big banks do. Depending on the broker you do use, there are often two ways that the currency conversion works. So firstly, you set up an Aussie dollar account and your money just sits in Aussie dollars while it's in cash. When you want to place a US trade, you place your order, and when it gets executed, the money automatically gets converted into US dollars at the going rate and stays that way until you sell it off. Then when you sell, the cash gets automatically converted back to Aussie dollars until your next trade. This keeps things really simple. However, the drawback to doing it this way is that you pay a conversion fee on top of your brokerage for every transaction, which can add up over time if you're doing lots of trades. It's not too bad with SPA3 Investor as we're only doing a small handful of trades every year, but definitely something to be aware of as it can add up over time if you're doing a lot of trading. The other way is to set up a US dollar account. Now, what happens here is that you convert your Aussie dollars to US dollars when you first set up the account, and that money just stays in US dollars for the entire time that you keep that account open. And a lot of brokers will want you to do it that way as well. Some will want you to do it the other way, depending on the broker. Okay, so as I said, you get the conversion fee either way. It doesn't happen on every transaction though. So this is generally the most cost-effective way of doing it if you're planning to keep US portfolio open for a number of years. Then of course, there's the question about trading a different time zone, okay? And do you need to stay up all night watching the US markets to place your trades, or get up super early in the morning to place your trades? And the answer is no, you don't. Many brokers, especially someone like Saxo, now allow you to set what's called a market on close order. For anyone using Saxo, you might have seen that, an MOC order in your trading platform. Now, it makes your life really easy and means that the time difference becomes irrelevant. What happens is you get the signal, like you can see here on T2. You'll either get it on the chart, or here's a little screenshot from a couple of days ago for the app there as well. So you place your trade as a market on close order when you get the signal through. What happens then is the market trades all day and you get filled at the closing price of the end of that trading day. All our research uses the close price of the end of the next trading day anyway, so it allows for slippage. So this actually, doing it this way, actually keeps you directly in line with the long-term research behind the systems. Now, if you're looking at this screen, you can see there's some pretty good stats on T2 here, or Take Two Interactive is what they're called, with a 70% win rate on that, and an average profit of 56% compared to an average loss of 7.07%. Now, Take Two Interactive are one of the biggest video games publishers in the world. This is another classic example of an industry that we just don't have much access to here on the ASX. And with market on close orders, trading these stocks in different time zones has just become so easy. You get the signal, you place the order, and it gets filled without you even having to be there. Many of our members find trading the US market even easier than the ASX for this reason, because it means that they're not tempted to watch the market while it's trading, and therefore they find it easier to keep their emotions out of it. It all happens while you're asleep. It's done, you don't have to worry about it, and the order gets filled. Okay, then the other big question, usually about the tax implications and will you have to lodge a US tax return, which actually does sound a bit scary, doesn't it? Who wants to deal with that? No one, I'm guessing. Now, I'm not your accountant, okay? So as I said before, please take this as general information and not as specific advice in your own particular situation. But the great news is that the Australian government and the US government have an agreement or a treaty that allows traders to usually pay tax in their own country. When you set up your trading account, your broker may ask you to fill out this one-pager W8BEN form that basically says you live in a country that's part of this treaty with the US, and therefore you report that income in your own country. Basically, Profits made from your US trades are reported on your ASX tax return. I know, for a lot of traders and investors wanting to trade the US, it's those few things, the time difference, the currency risk, the brokers, and the tax implications, or the fear of those things that really stops them, ever trading the US in the first place. It prevents them from even starting. It's not that hard, a little bit at first, but it's not that hard, and the rewards far outweigh the few little things you need to set up at the beginning. With technology the way that it is, it's become far easier and much more cost effective than ever before to trade the US markets. And speaking of technology, if you've used the simulation tool within Beyond Charts on the ASX market or the US market, for those of you who've got it, you'll likely have seen the massive potential the system has, given these longer trending, massively liquid, large stocks. Now, this is a pretty dramatic simulated results over a 10-year period compared to what I did. Rather than the S&P 500 total return index, I did it compared to the Aussie, because we're talking about, hey, you're trading the Aussie, should you be trading, or might you trade the US market? So let's look at that comparison. It's huge. Okay, pretty dramatic result. And of course, as we know, past performance is not an indication of future performance. Simulated performance is not a true indication of real performance. But as a business, what it does show is we're continually committed to making the system better for you as our members as we go along. Here are the stats behind that simulation too, if you're interested. So while we can't control the market as much as we'd like to for your benefit, we can keep working to give you more choices and work with you to help you find the best strategies for your own investing. We don't know what the ASX is going to hold. We don't know what the US is going to hold in the future, okay, which is why having the right mindset is so important. But these results and this simulation tool are just a couple of examples of how we do try and help you to get exposed to other markets, to have more options for your trading as well, and help you diversify your portfolio for those times when maybe one of the markets isn't doing so well, when the other might be taking off. Okay. Yet another big benefit to SPA3 Investor for the US is the amount of ETFs that we track and their diverse range of indices. Of the 32 ETFs, there are commodity index ETFs, gold and silver ETFs, there's sector ETFs, and a range of different international ETFs that you can see on the screen here: Japan, China, Hong Kong, Mexico, Germany, Brazil, and of course, all the big ones like the S&P 500 or the NASDAQ 100. And then things like, that on the individual sectors, the technology sectors or the industrial sectors, okay, that can have those huge growth periods at times. All right, so that's SPA3 Investor for USA. And as I said earlier, to access that, all you need is the US data, because you've already got SPA3 Investor for ASX. Lastly, for those that want to get really active with their portfolio and take things up a notch and get right into the US market, there's SPA3 Trader for NASDAQ. This covers the 3,300 plus stocks on the NASDAQ market, from the small penny stocks through to the behemoths of your Apple, Amazon, and Intel. Now, this is its own system and methodology, all built into Beyond Charts and the app. So there is a small upgrade cost, and it will take a bit more of your time each day. You run it just like SPA3 Trader for the ASX, and it could be used as another satellite portfolio, with the majority of your money still in SPA3 Investor. So let me show you how that works quickly in Beyond Charts. Again, this will be old news for those that are already using SPA3 Trader for the ASX or NASDAQ, but I did want to go through it quickly for those that haven't had much experience with SPA3 Trader, because it is a viable option for trading either the ASX or the US market. Once I've done this, we'll go through a couple of quick offers for those who are interested in getting started with the US market one way or another. All right, so let's jump in to Beyond Charts and have a look at that. So we'll open it up. All right. So with SPA3 Trader in Beyond Charts, you will have a scan set up. You run a scan of the market to get your buy signals. So you will find that under the Systems tab. We have all the different scans here. If you've just got SPA3 Investor at the moment, you obviously won't have these. You'll just have SPA3 Investor ASX stocks, but there's SPA3 Investor ASX ETFs, USA stocks, ETFs. But here is what we want. We want the SPA3 Trader NASDAQ new entries. Now, I'm going to hit Start Scan and we'll let it run. Okay, and you can see here it's ticking away. All right, so on the scan with SPA3 Trader for NASDAQ, we have some different buy and sell signals. So here we've got entry signals, so of course looking to buy in, exits are looking to sell. Pyramiding is that you've already gotten into a trade and it's saying, yeah, you can add some extra money to it. And then we have a lighten. A lighten is you've got in and it might be getting a little bit volatile, so reducing exposure to it, usually by 33%, or you've got in and it's shot up really quickly and you're locking in some profit there. So not just the straight buy and sell, there are pyramid and lighten signals there. And you can run a scan for all of those. Now, what I'm doing here is I'm running a scan using the CIROC of our 2108. Of our 1305, and there are 4 different settings. So with these CIROC settings, we have 1305, which is the most active, 17.7, 19.7, and 2108. Now, our SPA3 Trader ASX portfolio runs on 2108. But the great thing about SPA3 Trader is it allows you to get in on the ground level of stocks that before they become huge stocks. You know, Nvidia started as a nobody initially. Okay, this allows you to get into stocks before the majority of the market catches wind of them. You can see it's racing through here. We're getting through. So there is a little bit more flexibility with SPA3 Trader. There's different money management rules. We don't run it as an equal weighted portfolio. With SPA3 Trader, what we actually do is we set in different risk parameters when we go through that. Now, I won't go too much into those risk parameters now, but basically the different amount of money that you're trading with will have a different amount of risk allocated to it, depending on how much money you're willing to risk on any given stock. And also the risk of each stock will calculate how much money goes into each trade in conjunction with that as well. So it's not just buy the same amount of each stock, like we do with an equal weighted portfolio in SPA3 Investor. Here, I'll show you, here are our scan results. So out of the 3,322 stocks, last night, we had 13 come up. So we get more buys with SPA3 Trader because we're looking at a much bigger market. So of course, we're going to have more buys. Now, here we're going to click on this little button here and to choose a portfolio. And I'm going to use my Mindset Meets Mechanics SPA3 Trader for NASDAQ. And what this does is it opens up a little window. Okay, with SPA3 Trader, it's got to meet the right money management rules. It's got to read the right market risk rules, but there's also different combinations. So we look at volatility, we look at the ATR-VE of the stock, the percentage of movement in the stock. So basically with that, what we want to do is we want to buy stocks that are moving, but not jumping all over the place. So if something is too volatile, we don't want to touch it. Similarly, if it's not moving enough, and we're looking for short, sharp gains with SPA3 Trader, if it's not moving enough, you don't want to touch it either. So we can see here that we've run the scan, we've got 13 stocks, but on 5 of these stocks, it's actually come up with no trade. Okay, it's taken out, what have we got? It's taken out 1, 2, 3, 4, 5, 6 of the stocks. So automatically wipe them out. And we've got 5 different, we've got 8 left over that we can trade here. 7. So with these, you can see that they all have a different amount allocated to them. And just like with SPA3 Investor, you can jump in and you can have a look at a chart and you can come in and see the signals, a buy and a profit stop, buy and sell, and here's the last little buy. You can go back and you can look at all the historical signals of all the different stocks there. But here it's taking into account the risk of the portfolio and the risk of the stock. So it's calculating a different amount of money for each position. Okay, now, so something like Vera Therapeutics has a reasonably high volatility, and the combination of the buy signal is those things have said it's more risk, so it'll tell you to buy less of it. Something like this one, I'm not going to do that, but Eric it's telling us to buy more of the stock. So if we're going to trade it, simply click on trade, and here it's going to calculate exactly how much to put into the trade for you. Now, this will all happen on the app for you as well. You can go in and you can set up a portfolio on the app, but just to show you here, it will literally tell you to go in and buy 754 shares of Eric at $6.92 each or thereabouts. When your market on close order fills, it might be $7 or it might be $6.90 that you get it for. The brokerage costs, and that's just using self-wealth, for a trade value of $5,227 there. Yeah, if you were buying Cellbrite here, it's going to tell you to buy less of it because generally there's a bit more volatility, there's a bit more risk with it. So we don't put as much money into that trade because there is a bit more risk. So SPA3 Trader, it's not a static amount of stocks. It's not 9 stocks or 10 stocks. It will vary depending on the risk of the trades that you're buying, that you're going along there. Okay, so you would go in and do that. Now, the way you look for sells is pretty much the same way you look for buys, except instead of running a scan of sells on the entire market, you just run a scan on your portfolio for all signals. Okay, this is our SPA3 Trader public portfolio for NASDAQ, and it's got 2 stocks. Now, right now, the market is in a high-risk state on the NASDAQ, and we're not taking any new trades. Okay, we can actually see that in the list here. And just to explain what we've got the shares, the sector, the signal behind it. This is the technical signal that you can learn. It's in all the manuals for SPA3 Trader, the action, the date, the signal, date and price, the overall market risk. So this is something that we don't generally follow in SPA3 Investor, but something that we do have in SPA3 Trader. And when the market is in a high risk state, we don't normally take new trades because the likelihood of those trades getting dragged down in a volatile market it just means that it's too risky. The sector risk, volatility, the market cap, 0 trading days, the amount of days the company has not traded in the last 3 months, the liquidity, as you can imagine, we're trading stocks across the entire market. So liquidity becomes more of a factor in your considerations. It's not mostly large stocks like it is with SPA3 Investor. And then the value that we're taking of it. Okay, if you want to see the market risk, you can come up here and we can have a look at that. And we can see right at the moment, SPA3 Trader on the ASX, high risk, and it has been since the 5th of August. And we get that from the All Ords. SPA3 Trader for NASDAQ, we can see the sector risk, but we can also see that the market is in a high risk state and it has been since the 18th of July. So we haven't been taking any new trades with SPA3 Trader on the NASDAQ since the 18th of July. We don't need to liquidate the whole portfolio on that day. As you can see, there were still 2 positions in there, but we can not take any new positions and we just sell them off as the sell signals occur. Okay, so that's SPA3 Trader. Okay, now just to recap there, and I'll just jump back here. There are 3 ways that you can get access to the US market with Sharewell systems. The first, use the 4 existing ETFs within SPA3 Investor ASX. You already have access to those and you can see the signals right away. The second is to use SPA3 Investor for USA with its range of 63 stocks and 32 ETFs, accessing the big stocks with huge liquidity and setting your market on close orders to easily manage the time zone and the time difference. The third is to get really active on the US market with SPA3 Trader for NASDAQ, taking advantage of the short, sharp movements across the entire market. In terms of the cost for each of those, because obviously there is a cost, for SPA3 Investor ASX, the 4 US index ETFs, there's no cost. You've already got access to that. So nothing extra than what you're already paying. Go in right after this if you want to and place a trade with one of those 4 ETFs and you've got that exposure. For SPA3 Investor for USA, so you get the stocks and ETFs for SPA3 Investor, you're going to need the US data in addition to your ASX feed. Now, as you may have seen, we recently sent out a letter with the upcoming price rise at the end of this month. We've had a lot of members lock in the old prices for another year by paying their annual membership up front before the end of August, which we really thank you for. And it'll save you a bit of money over the next year as well. This offer with SPA3 Investor USA kind of works like that. In September, the membership for having a second market data feed will rise to $440 per annum. If you'd like to try SPA3 Investor USA and get the signals on stocks like your Apples and Amazons and Googles and Nvidia, then until the end of this month, we're happy to offer you the old price of $330 for the 12 months. From September, it's going to be $44 per month or $440 annually. So it's a good saving of 25% for getting it up and running this month. Then lastly, there's option 3, where you can upgrade to SPA3 Trader for the NASDAQ, and where you'll need that US data that I just mentioned, but also there is a once-off upgrade for the methodology. Now, this is usually 2495 by itself. SPA3 Trader for NASDAQ is usually 2495 by itself, or if you've already got SPA3 Trader for the ASX, it's usually $1,200. However, if you'd like to add SPA3 Trader for the NASDAQ, we'd be happy to offer it for a once-off cost of $800, plus obviously the membership. Same goes for anyone who doesn't have SPA3 Trader for the ASX. So if you've just got SPA3 Investor for the ASX and you want to add SPA3 Trader to it, normally $1,200, we'd be happy to do that for a once-off $800 as well. Now, if you are getting SPA3 Trader for the NASDAQ, you're getting that upgrade and getting the data, you'll obviously be getting SPA3 Investor USA with that too, because you're paying the $330 there, you just automatically be getting that. Okay, because it's not $330 extra per system. The one lot of $330 covers both systems in terms of the ongoing costs, just like it does on the ASX. Now, that pretty much rounds things up, brings us to the end of today. Sorry about the start. Hopefully I have shown you, after a little bit of a brief hiccup at the start, hopefully I've shown you there a few options for getting access to the US market, and that it may not quite be as scary as it seems. As I said, there's a little bit of paperwork, a few little hoops at the start to jump through, but yeah, it's not too difficult. And with technology getting better and better, it's becoming cheaper and easier than ever before to diversify your portfolio and take advantage of the massive potential that the US market can offer you as an investor. As I said before, please feel free to contact us on 0395850300 or email support@sharewealthsystems.com with any questions that you've got. Or of course, if you need a hand with anything with your existing system, or if you have questions on the 4-week process of mindset intensive that hopefully you've all finished by now. If you haven't, I really urge you to go in and do that. Give us a call and we can give you a hand with it. But until next time, have a great day, and I wish you consistent, peaceful, and objective investing. Bye for now.